Hello everyone, my name is Barbara Armstrong and I want to welcome you to this series of short videos on candlestick patterns. Today we are discussing three black crows, which is number 15 in our series. So let's get right down to it. If you are not following me on X, I invite you to do so. And just a quick reminder that everything that we discuss here is for general information purposes only, none of it to be construed as a recommendation or endorsement of any particular stock, chart pattern, or strategy. We'll be looking at our examples on the paperMoney software application on the thinkorswim desktop platform today. So what are three black crows? Well, three black crows are three bearish candlestick patterns that create this bearish pattern. They occur consecutively or in a row, and you've got three big, long, red bearish candles. And where you're looking for the close of each day to be at or near the low of the day. So we don't want to see a long wick at the bottom of these candles. We want them to have very short wicks or no wicks. So that momentum took us down right through the end of the day. And we're looking for the open on day 2 and 3 to either be within the body of the preceding candle or close to it, which is, what we see in this example here. And this, unlike some other patterns, can either be seen at a resistance level, establishing a new resistance level, or perhaps hitting an old resistance level and then falling with momentum, or it can be seen during an existing downtrend. And so that can indicate either a reversal of an uptrend or continued downtrend momentum. And, some patterns require confirmation and others don't. With this pattern, some traders might choose to look at other technical indicators such as relative strength and support and trend lines and that kind of thing. Let's go out and look at a couple of examples. So we're going to start here on American Express. And what we saw is the stock was uptrending, and then we had this bearish engulfing pattern, and then followed by two more big red candles on the charts. And ideally, we'd want to see closer to no wick or a shorter wick, but this does show us we had momentum day 2 starting within the body of day 1, and day 3 starting, it opened almost where it closed the previous day. So there's an example of something that looks like three black crows. And you may say, oh, could we call this a flock of crows? Well, actually, a group of crows is ironically called a murder of crows. And I just think that's kind of interesting in the context of trading where, your uptrend or your bullish optimism may have just been murdered by these, three black crows. And I spent an inordinate amount of time looking for examples. The market has been pretty bullish of late as I'm recording this. And this one would technically not quite qualify in that this wick is way longer than we'd want to see it. But on Apple here, starting on June 5th, we had, 3 big down days in a row. And where the body of this candle opened within the body of the previous day, this one opened near it. And this shows a lot of, bearish momentum. And then let's look at American Express. And, I think you've got the idea. So stock was rallying, and then, we get these 3 big bearish candles in a row. Bearish engulfing to kind of open it up, and then followed with big momentum to the downside on day 2, where it opens within the body of the previous day and follows through on day 3. So there are the 3 black crows, my friends. If you wanted to look for other examples, you could come and look at MasterCard, and there are other examples out there. With this one, we're going to have to go back a little further. But where we're seeing a lot of downward momentum. So thanks for joining me. Stay tuned. Lots more short videos on the Candlestick series to come your way. Bye for now.